Ladies and gentlemen, good day and welcome to Balaji Amines Limited Q3FY22 Earnings Conference Call hosted by Phillip Capital India Private Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involves risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Apurval Shah from Phillip Capital India Private Limited. Thank you and over to you.
Thank you, Stanford. On behalf of Phillip Capital India Private Limited, I welcome all of you to the Q3FY22 Earnings Conference Call of Balaji Amines Limited. We have with us today Mr. Ram Reddy, Promoter and Managing Director of Balaji Amines Limited. We request the management for their opening remarks, post which we will open the floor for Q&A. Thank you and over to you, Ram sir.
Thank you, Apurva. Ladies and gentlemen, a very good evening to all of you and welcome to the conference call to discuss the financial performance of the Q3 FY22 performance of the company Balaji Amines Limited. I hope you have got a chance to go through the press release and the financial statements submitted to the stock exchanges and uploaded on our website. First, kindly let me take you through the consolidated financial and operational performance. Despite sluggish demand for few of our products, as some clients could not procure the key starting raw materials for some of our matching products and shutdown of 2 plants for debottlenecking, that is dimethyl formide and acetonitrile, we are pleased to have achieved decent quarterly results. We recorded 44% growth in total revenue, which stood at 566 crore in Q3 FY22 as against 393 crore in the corresponding quarter of previous year. The total volume stood at 27,589 metric tons for Q3 FY22, down by 13.8% as against 31,993 metric tons in Q3 FY21. And for Q3 FY22, volumes of basic amines stood at 6,460 MT and amines derivatives volume stood at 9,912 MT and that of specialty chemicals stood at 11,207 metric tons. Despite fall in volume, the growth in revenue was on account of better product mix, which culminated a better price realization, especially for the products of the subsidiary company. The EBITDA was up by 35%, which came in at rupees 160 crore in Q3 FY22 as compared to rupees 118 crore in the same period last year, with EBITDA margin at 28.2% in Q3 FY22 as compared to 30% in the same period last year. The fall in operating margin was primarily due to lower operating leverage on account of dip in volume uptake. We expect operating margins to inch upwards in coming quarters on back of moderation in prices of key raw materials, favorable product pricing and better product mix going ahead. Profit after tax recorded an increase of 29% at rupees 102 crore in the current quarter under review as against rupees 79 crore in Q3 FY21. PAT margin stood at 17.9% in Q3 FY22 as against 20.1% in Q3 FY21. Diluted EPS for Q3 FY22 stood at rupees 27.64 per equity share as compared to rupees 23.12 per equity share in Q3 FY21. Now coming to our consolidated performance for 9 months FY22. Revenue from operations in 9 months FY22 stood at rupees 1,546 crore up by 72% as compared to rupees 900 crore in 9 months FY21. EBITDA witnessed a growth of 78% from rupees 247 crore in 9 months FY21 to rupees 438 crore in 9 months FY22. Our EBITDA margin expanded by 92 basis points to 28.3% from 27.4% in 9 months FY21. PAT for 9 months FY22 witnessed a jump of 86% to rupees 287 crore from the rupees 155 crore in 9 months FY21. Diluted EPS for 9 months FY22 stood at rupees 80.15, 80 rupees 15 paisa per equity share as compared to rupees 44 paisa per equity share in 9 months FY21. Total volume stood at 81,569 metric tons for 9 months FY22 as against 77,510 metric tons in H1 FY21, recorded a jump of 5%. For 9 months FY22, volumes of basic amines stood 17,714, amines derivatives volume stood at 27,760 metric tons, and that of specialty chemicals stood at 36,095 metric tons. Our subsidiary company, Balaji Specialty Chemicals Private Limited, continued to witness substantial demand as well as robust price realization. We logged sales volume of 3,887 metric ton in Q3 FY22 at our subsidiary plant as against 3,640 metric ton in same quarter last year. We have recorded the capacity utilization of about 52% in 9 months FY22, and accessibility for raw material required for manufacturing production of the subsidiary plant continued to remain a major challenge in Q3 FY22. However, from the month of January, the supply bottlenecks have eased, and we expect to operate the subsidiary plant at 70 to 80% capacity in the next fiscal year. Non-agrochemical clients constituted about 30% of the total sales of ethylene diamine in 9 months FY22 from about 10% in earlier quarters. We have increased the share of exports from the subsidiary plant from 15% in H1 FY22 to 18% in 9 months FY22, and our endeavor is to increase it to about 25 to 30% going forward. We anticipate achieving annual turnover of about rupees 475 crore to 500 crore in next fiscal year, and margins are expected to further strengthen at the subsidiary level as the production gets ramped up. The construction of new plant for dimethyl carbonate in phase 1 of Greenfield project Unit 4 is nearing completion, and we hope to commence operations in Q1 FY23. Until 31st December 2021, we have undertaken a total capex of rupees 236 crore in phase 1 of Greenfield project. The capacity of the plant would be about 10 to 12,000 tons per annum. The company would be the sole manufacturer of this product in India, and currently the annual domestic demand stands at about 8,000 to 9,000 tons, which is completely met by imports. We are confident to achieve capacity utilization of 60 to 70% at our DMC plant in first year of operation itself. DMC has major application in the manufacturing of polycarbonate. It is also used as a major solvent in the production of lithium batteries, and the consumption of which will exponentially grow in India, backed by various government incentives. At the same time, we see encouraging scope for exporting DMC to outside markets also. The prices of DMF continue to remain healthy, and with the completion of the debottlenecking exercise, the capacity utilization of this plant has increased substantially, the full impact of which is likely to be visible in Q4 FY22 and next financial year. We expect the capacity utilization of DMF plant to increase from current about 34% in 9 months FY22 to 70 to 80% in coming quarters. As disclosed earlier, we also plan to set up an additional plant of acetonitrile having capacity of 50 TPD by using a different technology which will address the adverse impact of higher price of acetic acid and shall lead to healthy operating margin. This plant is expected to commence operation by end of FY24. Upon smoother accessibility to the raw materials for matching products at our client's end in coming quarter, we expect to witness an increase in capacity utilization over the next fiscal year. Also next year, we expect substantial improvement in volume uptake from improved capacity utilization at our ethylamine new plant, DMF and acetonitrile plants, as well capacity addition on account of the new product dimethyl carbonate plant. Methylamine is a key raw material and the base product for value-added derivatives required by pharmaceutical and agrochemical companies. We are currently the market leader in methylamine production in India, and 80% of our methylamine production is captively used for manufacturing value-added products. Pharmaceutical application segment and agrochemicals are expected to drive significant demand for methylamine in India as well as global markets. As announced earlier, to meet our increasing captive requirements, we plan to set up a separate plant for methylamine with capacity of 40,000 to 50,000 tons per annum under phase 2 expansion of Greenfield Project Unit 4, for which the company has already received environmental clearance. That's all from my side. We now leave the floor for open for question and answers.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Anyone who wishes to ask questions, please press star, then 1. First question is from the line of Amar Maurya from AlfAccurate Advisors. Please go ahead.
Hi sir, thanks a lot for the opportunity. Sir, couple of things. You said that now this quarter the volume degrowth was largely due to the capacity constraint, right?
Yes.
Okay. So from next quarter you are saying the capacity will come, correct?
Yes.
Okay. So basically that what the volume debottleneck which was there in this quarter, I mean volume constraint which was there in this quarter, that should be addressed from the next quarter onwards.
Yes. See, there are two reasons. One reason, there was some of the plants at our client end where they could not run because of the their matching raw material was stuck with the chain and other things. And second thing, like our acetonitrile plant and DMF plant was down for the debottlenecking purpose, almost 30 to 40 days the plant was down, so that capacity also is short in this volumes, so which will come because as the debottlenecking program is completed, from this quarter you will see the proper volume growth.
Okay. Okay. And secondly, sir, about the subsidiary, what you are guiding is something around 500 crores top line. Did I hear it correctly?
Yeah, 475 to 500 crores. I think we already done 9 months, 326 crores.
Correct. So, and what kind of margins are in that?
I think with this quarter ended, we have done something 39.84% is the EBITDA margin, and 9 months is about 34.94.
Correct. So like, tentatively, what kind of the EBITDA margin, around 25% plus EBITDA margin is possible for the next year also?
I think it should be minimum.
Oh, minimum. Fair enough, sir. Thanks a lot, sir. I'll come back in queue. Yeah.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Prateek Chaudhary from Ambit Capital. Please go ahead.
Good evening, sir.
Go ahead, Mr. Pratik.
Yeah. Sir, in the interview today, you alluded to the fact that you may be doing upwards of 2,000 crore turnover and maybe closer to 2,200 or 2,300 crores for the year. So that would call for a very significant incremental quarter-on-quarter uptick, which we probably haven't seen this significantly ever in the past in our history. So what is leading to such a significant scale up coming into the quarter and the next year? And in your opinion, how far is it sustainable?
So it is because of the capacity utilization. Just now I said in the earlier question, my answer. See, without DMF full utilization and without full utilization of acetonitrile, the figures you have seen of the 9 months, that is 1,541 crores you have seen. We expect these 3 months we should do with all these addition capacities. So on the second thing for your question, there are prices have been increased unlike earlier years. That is also adding to the value growth. So definitely you will see the 200. Earlier I used to say 1,800 crores something, but it should go to 2,000 plus. We should end up by 31st March for the top line.
Okay. And sir, second question on you mentioned that maybe after the Chinese are done with their the Olympics over there, and maybe then you will be in a better position to disclose the new products or some you mentioned some there are 4 or 5 products which you might get into manufacturing. So are these new? Hello.
We have many products in the pipeline. In addition to what we declared, in addition to that, we have some of the products which we will disclose at an appropriate time.
And these are all new products.
Yeah, 1 or 2 new products are there, and some old products also. Addition, as I said right now in my opening remarks, like methylamines and DMF and acetonitrile, these are already there. In addition to that, we have 2-3 products, other products which we are discussing. Actually, we have done the R&D and ready, but we just want to see how the Chinese market will react. After that, we'll take a decision.
Okay. Okay, sir. Thank you. I'll get back in the queue.
Thank you. The next question is from the line of Sachin Kasera from Swan Investments. Please go ahead.
Hello.
Yeah, Mr. Sachin, go ahead.
Yeah. Congratulations for a good set of numbers. Sir, one, if you could update us about this acetonitrile.
Sir, I'm sorry to interrupt. Your voice is not coming in clear. Maybe request you to use your handset, please.
Little loud.
Yeah. Can you hear me now, sir?
Yeah. You can little louder. Okay. Go ahead.
Yeah. So, sir, regarding acetonitrile, if you could just tell us what is the production that we did for the quarter and the 9 months, and with this debottlenecking complete, what type of volumes we can look in financial year 23?
We have done hardly 6 to 7 months. Out of 9 months, I think we operated only 1 quarter and second quarter part and third quarter part. So that means it is almost 6 months we operated and 170 to 180 days at the rate of 9 tons of the production. But coming month, now it started in this quarter, it will be operating properly. More than 10-11 tons per day it's operating.
Okay. And regarding DMF also, you have mentioned that now we're expecting utilization to go up. So for the next year, what type of utilization we should look for DMF? And if you could give some sense on the current pricing that is there in DMF.
The current pricing varies from the 175 to 210. That depends upon the small customers. They are buying at 200 and 210 also. Some import material people are selling at 210, 205. But our realization is about somewhere 175 to 180 rupees. And we are operating currently at We expect this quarter we should operate in the minimum 70% capacity for this quarter, and even next year also we should be in a position to operate 70 to 80% if things goes like this.
Sure. And lastly, sir, if you could tell us about the capex that we have done in the current financial year and what is your plan for the next financial year in terms of capital expenditure?
I think I've already given 236 crores we have already done, and maybe another 15-20 crores we will be doing in this coming 1 or 2 months to complete this DMC commissioning. And next year, as I said, we have all the plans are ready. We are just waiting for the reaction. See, honestly speaking, this is for everybody, all the investors who are listening this. See, because of this Olympics, whether they have stopped the production of some of the products which are not coming to the country and prices have been increased because of natural gas or because of this Olympics or any other reason. We just wanted to understand. This clarity we expect that we can know only after this Olympic, that is by end of this month. By March, we are going to take the major decisions like doubling the DMF capacity, methylamines capacity, and even acetonitrile capacity. All these things will come into the stream. Next financial year will be very important and crucial for the capex point of view.
Sure. And lastly, sir, any update on the merger of the subsidiary? Last quarter you had indicated that we are going ahead with that. So
we are looking. See, that board has looking for the alternates, how to do evaluation and all. They are already working on it. Maybe in coming 1 or 2 years it should happen.
You're saying 1 to 2 years or 1 to 2 quarters, sir?
No, 1 to 2 years. You see, this year is already completed. It's, they are looking for the options whether they can do any, because if the capacity goes full, they may look for some expansion also in that. Then they can merge it. In that board they are discussing. We'll come back to you in an appropriate time. Okay.
Yes, sir. But just a suggestion. This is something that has been pending for long. It's a big overhang on the stock also. So my request and suggestion.
We are on track. We told that after finishing the 1 or 2 balance sheets, we'll be doing appropriate action, whatever required for that. So it is not completed now. This is the first balance sheet coming up, right?
And sir, what happens to the loan that we given of 77 crores to Balaji, especially now they become very profitable? They'll be returning that loan to us. How will it work?
Yeah, they are paying both. Even banks also. If you see the total debt, it has almost 15 to 20 crores we have paid back, and we are paying regularly.
Okay, thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference call, please limit your questions to 2 per participant. For any further questions, you may come back for a follow-up. The next question is from the line of Jayveer Shekhawat from Ambit Capital. Please go ahead.
Good evening, Mr. Reddy. Mr. Reddy, my first question, if I remember in the 2QFY22 earnings call, you had mentioned that you had started passing on the higher RM prices to the customers, given your transition period of about 3 to 4 weeks was over. But if you see the standalone business gross margin or EBITDA margin, these have come largely flat quarter on quarter, even in 3Q as well. So what explains that? See,
because we have passed on some of the raw materials and some of the new problems in the new raw material. Like earlier we were talking about the methanol and ethanol, and today we are talking about the ammonia. This ammonia is increased every week. It is increased. Today from 40,000 it has come to 80,000 rupees per ton. That is one major issue. Second reason for the declining the margin, we could not utilize some of the plants because of the debottlenecking program has taken, which were very profitable products. So that is also another reason. So you will see in the coming quarter, you will see in spite of 30-40 days the plants were down, we are in a position to give at least these numbers. But definitely in the coming quarter, you will see the overall annual results. You will see much better.
Sir, if I may understand, because I understand the prices for methanol as well as acetic acid, they have started softening, but ammonia, as you said, has actually increased. So what is propelling that increase in prices?
The increase because they are talking everywhere because of the gas shortage. It is a global trend for this product. We expect after this March that winter in some of the places they are using the gases for the other heaters and all, but they hear from the supplier probably from the next 1 month it should be softening, and these relief what they have given the government of India in yesterday's budget, like in methanol and acetic acid, that should compensate to some extent in the get this ammonia prices increase.
Sir, also we note that Alkyl currently has a similar ethylamines capacity as you at roughly about 22,000 tons per annum, but now they are ramping it by another about 30,000 tons per annum. So do you believe there is actually a lot of demand in the market to absorb it, and could that actually lead to any pressures on realization, because there could be an oversupply as well?
That I do not know what Alkyl is doing, but what I can say is whatever we have done the expansion of 50 tons per day, we are in the right track. We are already ramped up to 100% capacity. And we have some advantages, as I said earlier. Our technology is totally different. We have some plus point for this. So definitely we will have, not only, see why you talk about the countries, if the capacity increase, the more inventory is there, then the company can go outside country also. It's a world product, right?
Sure. Thanks a lot, Mr. Reddy. I'll join back in the queue.
You're welcome.
Thank you. The next question is from the line of Nitin Damania from Kotak Securities. Please go ahead.
Good evening, Mr. Reddy. So just continue with the earlier participant questions on the ethyl amine. Now, sir, can you give us what is the demand supply dynamics in the domestic market as far as ethyl amine is concerned? Because if the new capacity is coming in, there can be a huge supply that can probably come up in the market.
That I do not know. See, they have started some expansion, means they might have seen the next 5-10 years growth focus they might have seen. But what we have done, we have seen for the next 1 year, we should be in a position to run in 100% capacity.
So if we are looking at from the current perspective, what will be the demand supply as of now, industry demand supply?
See, I told you, if you recall my earlier Concalls, I used to say that there is a 700 tons to 800 tons import coming every month to the country, which we would like to target that first. And some quantities we should go outside country. The exactly thing what we have done, if you see this quarter and last quarter import data is almost nil. Last month I have seen only 32 tons is imported. Last before only 70-80 tons. Normally it used to come almost to 700 to 900 tons every month. So this is whatever is happening. And in addition to this, if you see the export data, some products from our basket of this triethylamine is going outside also.
Okay. And sir, in terms of like, you said that ammonia prices have increased substantially from 40 to 80, and even Russia has probably taken an action of banning an ammonia. So what inventory do we have in terms of ammonia, and is it that we are sufficient enough for the quarter to feed our
My dear friend, ammonia cannot be stored more than 1 week. Maximum 1 week inventory will be there, but we have the tires, the domestic manufacturers who have given the assurance at least 1 to 2 months assurance is there. We should travel with this situation, my dear.
Right.
Because if you pay price more, you will get, and you should be in a position to pass on your price to your end user. That's all.
Okay. And the last question is on the subsidiary. Now, since we will be crossing near about 470-500 crores of the revenue with almost 25% of EBITDA margin next quarter, what is the roadmap for going ahead? Because probably 75%, 80% we might achieve in FY23, and after that, are we looking at any expansion in subsidiary?
We have the plans. It is separately discussed in their board meeting. Like some of the derivatives, if situation demands second plant of the similar, or some of the derivatives of the EDA, papers in that. We have a lot of things in the pipeline.
Mm-hmm. Okay, sir. I'll again join back in queue. Thank you.
Thank you.
Thank you. Participants who would like to ask questions, please press star, then 1. The next question is from the line of Reena Shah from Elara Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. Can you hear me?
Yeah, go ahead, Reena.
Okay, thank you, sir. Sir, I just wanted to understand more on DMC. You said that it is more used for manufacturing polycarbonate and lithium batteries. So basically, this is kind of a B2B product. Am I correct?
No. Yeah. It is used in the pharmaceuticals also. It's various applications are there. I just given the broader this thing. But presently, country without battery, without PC, without polycarbonate, without battery, country is already importing 8,000 tons as on today.
Okay.
For the various pharmaceutical applications and all other things. So what I have seen with the recent inquiries from the various battery manufacturers, we expect that definitely there will be very good growth, because we never expected that this fast the battery manufacturers will come in India.
Okay. So what could be the potential market size? Today I do understand that market size is around 8,000 to 10,000 tons. But what could be the potential market size that you are looking into India or over the globe?
See, as on today, 8 to 9,000 tons is already there in the country, and with our survey with my existing network outside country also, we have another 8 to 10,000 tons for the various parts of the world we have. So definitely there is a good demand for this, and here we are expecting to I'm telling 10 to 12,000, but with some debottlenecking it may go up to 15,000 also. And second thing, in the same plant we are getting two products. One is a dimethyl carbonate and second is propylene glycol. Actually, I missed to say, these both put together will come almost 25 to 30,000 tons.
Okay.
And which should generate with a moderate price around 200 crores of top line, if everything goes well.
Okay. And so what could be the margin target for this kind of product? Like, would it be on a higher side or?
It's very difficult. I wish, I love to get more than existing margins, but it's not in our hands. Once we launch only, we can be in a position to tell where we are allowed by the market.
Okay, got it. And sir, this quarter, I have seen that your amine products volumes has been on a higher side. So when you said that you have a, realization benefit because of better product mix, I just wanted to understand how, because I think amines is the one who are basic products relatively, as compared to when you go to amine derivatives or this thing, where we have seen a volume dip. So how this is?
I will tell you.
Yeah.
I think I answered earlier also. Now also I want to clarify once again. See, amines, since we have the more than 60-70% in-house consumption. When there is a consumption more, you will see the more value addition in the intermediates, and based on the amines, you will see more values in that.
Yeah.
And less value in sales in the amines. Sometimes if I use less market for these intermediates which are based on the amines, so that time you will see more of outgoing amine sales. So it's very difficult to say, and these are all sometimes driven by the season also. Like agro season, if you supply more of the methylamines to the agro season, that time you will see only growth of the methylamines, and you will see less in the intermediates. That is how it works in our specific company, right?
Okay. Hello.
Yes.
Yes. Hello.
Go ahead. Do you have any question?
Yes. One last question, if I may, ask. This subsidiary that you are, trying to consolidate, your consolidated volumes, I believe from this quarter only you have started the consolidated volumes breakup of the segment wise. So my understanding is the additional volumes which have been coming, it is from specialty chemicals only. Is my understanding correct for this?
Yeah. See, this time we are giving, last quarter also we have given, but this quarter it is more visible because of specialty has given more strength to the parent company. That's the reason you are talking about that. Actually, we have given last quarter also.
Last quarter you have given consolidated numbers, but breakup in volumes is given for standalone numbers. So that is why I just wanted to understand.
You are right.
Yeah. So this extra volume is coming from specialty chemicals, right?
Ms. Sri, requested to come back in the queue for a follow-up, please.
This is just a completion of one word. That's it.
Can you repeat? It's some disturbance.
So the difference between standalone and consolidated volume numbers is just for specialty chemicals. Is my understanding correct?
Yes.
Okay.
You're right.
Thank you. Yeah. That's it.
Thank you. The next question is from the line of Vishal Baraya from Max Life Insurance. Please go ahead.
Hello. My question is on the polycarbonate versus PVDF and PTFE kind of use for the lithium-ion batteries. So could you elaborate a bit as to which is relatively better and which of the ones, fluoropolymers or carbonate-based polymers, would see higher demand from the lithium-ion battery?
See, for me also new, these two names I also heard when I was talking to the lithium battery. They said that along with the other solution, they mix 30% of this solution in the solvent which they pre-mix for the battery solvents. And it is used by everybody. Every battery manufacturers, they will be requiring DMC, what I heard. And along with this, I think NMP, N-methyl 2-perdolone, which is our product, is also used for the battery manufacturing.
Okay. Fair enough. Thank you.
Thank you. The next question is from the line of Rohit Nagraj from MK Global. Please go ahead.
Yeah, thanks for the opportunity. So I'm audible?
Sorry, your voice is breaking.
Yes. Hello? Am I audible now?
Yeah, go ahead.
Yeah. So my first question is in terms of industry dynamics. Now, you've mentioned that, last couple of years we have done expansion. We've had a fairly good volume growth. We are expecting that our, commission capacities probably will be running at optimal utilization in the next foreseeable future. So what has changed in terms of the dynamics, domestic part or exports part, wherein we are so confident in terms of scaling up the volumes and then going in for the next leg of expansion? Thank you.
See, this is basing on the outgo of the products and the market demand. There is about 10 to 15% rate growth rate is there for all the amines. And the most important thing is during the last 1 year, the pandemic situation, some of the new doors have been opened for Indian companies. Like where China was giving, when China stopped, as an alternate, India could get some chance, and where sometimes we have given 100% to those customers. Even if China comes back by U-turn, taking U-turn, the people who bought for these last 2-3 quarters, they should keep the Indian companies as a second supplier, if not 100%, at least 20-30%. A new gate open for all this. This is one thing. Second thing, the government of India and Atmanirbhar Bharat schemes, lot of pharma, API companies, agro companies have put up their papers. If we take at least 50% of the papers put up companies metallizes, there will be tremendous growth in the API intermediate and agrochemical intermediates, which for the years together they are depending on the China and other countries. Those things, if happens in the country, so definitely we will have the good opportunity. These are all the reasons why everybody is taking the opportunity for the expansions.
Right, sir. So just a clarification on this. Apart from China, globally, are there any major suppliers who are looking for expansion, or probably they don't have any plans for expansion? and which gives us better opportunity?
No, see, expansions are everywhere it is happening. But I'm not talking about only India. If China is not giving around the world, India is getting opportunity around the world, not only in India. So that is the reason there is every possibility for all chemical companies in the country, specifically specialty chemical and intermediate companies, will get a good opportunity for during this period, which they are going to eat away the cake of China to some extent.
Right. Got it, sir. So the second question was in terms of our capabilities from the R&D front. Can we go into, say, some specialized amounts which are third, fourth derivatives? Because already we have established ourselves in terms of the basic and one forward derivative. So is it possibility from our R&D and capability perspective? Thank you.
We have many of the products already delivered from our R&D only, and even future also we are looking. Main focus will be import substitute. We just check whatever is coming to the country for the years together. Those things we are doing putting all our efforts to develop in-house and putting up the plants. This is how if you can see our track record. In future also you will see such products only.
Right, sir. Thank you so much and best of luck, sir.
You're welcome. Thank you.
Thank you. The next question is from the line of Vivek Gautam from GS Investments. Please go ahead.
Sir, congratulations on yet another solid quarter, sir. Sir, just wanted to have some information because on your background being civil engineer and from the landed class, and capex seems to be your forte, sir, and you are doing lot of capex on time. And has that become a sort of a mode for our company in terms that we are able to do constant capex, making import substitute products and before time? So what is helping us? Because I believe yours is a civil engineering background and others also civil engineers. So how come so much of expertise in chemical engineering almost better than the UDCT professionals working in other sectors and other companies, sir?
I cannot comment on that. But yes, we have the proper plans. We have, once we take out any product from the R&D, then we do the pilot plant, then we will go for the commercial. This is how we execute the projects. And most of the times we have even project also we will do on our own. We do not have any implementing agency. That makes a lot of difference. So far, whatever we built, all the plants, these are built by our own team by hiring the people, hiring small contractors. There is no project implementing agency involved in our company for the so far. That is one thing. Second thing, we have the experienced team within, and even the contractors who are working with us for the years together. So for any plant, once we decided, it will not take more than 8 to 11 months to come out of the production.
Exactly, sir. Yeah. And how big is your R&D team, sir? And how much is the focus on the R&D? That seems to be quite a big moat for us, our company, sir.
We have they're not big team. We have a reasonably sized team where few doctorates and few BSc, MSc people are working on it. And we are all completely unfocused. Suppose if I give one product, everybody should work on that one product. And other team will be working on doing the fine tuning of the existing plants also. We are not sticking only for the new projects. The R&D team is helping us to reduce the production cost, fine tuning of the existing plants, where we can reduce the cost of the production. All those things, our team is working.
Yes, sir. And so China basically...
operator. Sir, I'm sorry to interrupt. Mr. Gautam, may we request you to come back for a follow-up, please?
Okay, thank you. Thank you. Keep up the good work, sir. Thank you.
Yeah. Ladies and gentlemen, we request you all to please limit your questions to one per participant. The next question is from the line of Shanti Patel from Shanti Patel Investment Advisors. Please go ahead.
Well, good afternoon, sir.
Very good afternoon, Shanti.
My question is, if everything goes in our favor and after this China, what is that word called, gets over, And if we think that our own plants can commission, there is a good demand for the product, what will be the incremental revenue and the impact on profit will be there in the next year?
See, next year we are expecting with this addition of DMC and existing plants which are under after debottlenecking, which are on the stream now. So we should expect minimum 2,500 crores revenue, and we should be in a position to maintain 25 to 26% EBITDA margins. This is a conservative basis I am telling you.
Yeah.
Thank you.
Thank you very much.
Thank you. The next question is from the line of Amar Maurya from Alpha Credit Advisors. Please go ahead.
So thanks a lot for the opportunity again. So just wanted to understand what kind of volume growth we should expect in a standalone business for the next year.
Minimum 10 to 15% without adding any new capacity. Since we are adding a new capacity, if that goes in full capacity, you will see another 15,000 tons minimum from the DMC, which will add in the next year's total volumes.
Correct. So basically you are saying standalone without adding any capacity, minimum 15% growth, and plus I should add another 70% utilization of the DMC.
No, you see, normal course you take it 10% and you add another 10 to 15,000 tons.
Okay. So I believe, sir, this year closing you will do more than around more than 1 lakh kind of a volume, right?
We should be in a position if everything goes well.
Okay, perfect, sir. And about the realization?
See, that again, that depends. So far, till date, we have seen this quarter, it's in the track only. Only 1 month left, 1.5 months left. We'll see how it will happen. If it goes to things like this, definitely we'll be doing plus only.
Okay.
Whatever we've done this quarter, it should be plus to the existing quarters.
Sure, sir. Thank you.
Thank you. The next question is from the line of Dhaval Shah from Swan Investments. Please go ahead.
Hello. Sir, yes, sir. Sir, referring on the presentation, slide number 44, you mentioned about the capex phase and the guidance for FY23 and plus the brownfield expansion. Can you give a little bit of brief explaining the entire, the journey which you have mentioned about the existing capacity plus brownfield and greenfield will lead to the future growth. So how should we foresee the capacities getting added and the total capacity over years?
See, I said, like in the greenfield projects, in this unit 4, where we call it as greenfield, you have seen one DMC is adding from the 1st April onwards, you will see it is adding the product coming out in the market. After that, as I said just now, we have 4 projects ready along with all the detailing, engineering, everything is ready. And we have done some of the overhead utility also we have completed, like storages and all those things we already completed ready. Now we are waiting for the Chinese reaction.
Okay.
Because the expansion will be done, anyway expansion will be done. Which product will sit in front seat, which product will sit in back seat? That will be the only question which will take a decision by March.
Okay.
Then you will see in the next Concall, you will see the definite which project is coming up and how many months and what is the amount. All these things you will hear in the next Concall.
Correct. So sorry to interrupt, but you mentioning about 50% revenue growth for 23. And just to the previous participant, we were mentioning around 10% kind of volume growth, and we had another.
Yeah, this is yes, sir. I will tell you, this is considering with existing plant 10 to 15%. An addition 35%, which will come from the DMC, dimethyl carbonate, if we transfer 70-80% capacity, dimethyl carbonate and propylene glycol. So 25,000 of 35%. will, if you add this, then it will come to 50% only, 45 to 50%.
Got it. And this we.
So the operator. Sir, I'm sorry to interrupt. Mr. Shah, may we request you to come back for a follow-up, please?
Okay. Thank you, sir.
Thank you. The next question is from the line of Rajiv Rupani, an individual investor. Please go ahead.
Yeah, Mr. Reddy, I'm audible.
Yeah, Mr. Rajiv, go ahead.
Sir, firstly, congratulations on attaining 100 crore profit for the first time in one quarter. The company has come a long way and it has rewarded shareholders handsomely. Sir, my first question is regarding THF. When are we planning to start that? Any update?
See, we are already working on this, Astronitrile, which is entered in the market and have certain commitments. We don't want to withdraw from the market, and we do not have any separate plant for that, as I said earlier. Maybe the moment we start this next expansion, we are talking about the new plant, new technology. That time we may think of, if market situation, everything improves, and even if it is like this also, probably existing plant may go for the THF.
Okay, and my next question was on DMA HCl. We had approvals for 7,500 tons in addition to our existing 24,000 tons. So, what's the update on that?
We have not taken up. This is the reason is so-called matching key raw material is only that only. It has badly affected the metformin. See, for metformin, along with the dimethylamine hydrochloride, they need another product called DCDA, which is almost 98% is from the China. So people are not getting that material, and even if they are getting also, they are getting very high price. Like people used to get at 1,100, 1,200 rupees, and today they are buying it $4,000, $3,000, $4,000 per ton. So that's the reason we also just kept on hold, because the current plant we want to run in 100% capacity, like 22,000 tons per year. We are presently operating 2,000 tons per month. Operation is going on. So definitely, the moment the DCDA situation improves, then metformin people comes out, then definitely we will add this additional capacity.
Okay, and my last question was
the operator. Sir, I'm sorry to interrupt. May we request you to come back, please, for a follow-up?
Sure.
Thank you. The next question is from the line of Jayveer Shekhawat from Ambit Capital. Please go ahead.
Thanks a lot. Mr. Reddy, just wanted to understand, I see your 2Q FY22 numbers as well. Your other expenses were up almost about 40%. So an addition of about, say, 20 crores. And these have largely stayed stable on a quarter-on-quarter basis, I mean at 95 crores. So what has led to that jump in 2Q, and how much of that was due to the increase in the power and fuel expenses amid the rise in coal prices?
Yeah, power and coal expenses actually increased a lot. Earlier we used to get the coal somewhere 8 to 9,000 rupees. 8 to 9,000 rupees. Today we are paying more than 10 to 11,000 rupees per ton we are paying.
And sir, I understand that the prices have actually increased further, and because they've almost doubled. So how have you been able to keep the other expenses intact?
Also, it has gone up. In between, it went up to 15,000, and again it has come down to 9,000. And again, the last week it has increased to 11,000-12,000. That is the main problem.
Sir, if you allow me one more question, so that's on the diamines and chemicals. So they are also expanding their existing production capacity to manufacture certain pharma intermediates and specialty chemicals. And we know that they've also received an EC for that. So, I mean, how do you see that development, and could that lead to oversupply in any of your products?
I will see positively, because whatever they have shown, they're all required to our product. Like they say, pipergen derivatives, they need pipergen, which we have to sell to them.
Okay, well, interesting, sir. Sure. Thanks a lot.
Welcome.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
Thank you. Thank you for taking out time and participating in our conference call. The overall outlook for Indian pharmaceutical companies and agrochemicals is expected to continue to improve on account of impetus being given to China Plus One policy by companies in Western economies. Pharma and agrochemical constitute substantial majority of our end user clients for aliphatic amine as well as the specialty chemicals that we manufacture. Given the strong correlation between the demand for our products and that of demand for the products from our end user industry, we foresee a robust growth potential for our company in years ahead. At the same time, we are also continuously striving to increase as well as diversify our product portfolio to address more segments of our end user markets. And thank you once again to all the stakeholders, shareholders, the investors showing confidence of our company. And thank you once again.
Thank you very much, sir. Ladies and gentlemen, on behalf of Phillip Capital, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.